Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXPesa. Good morning, everyone, and welcome to this session. So today, we will be looking at quite a number of things. One will be the key highlights for last week. Two, we'll be looking at the economic calendar, try and understand the key events for the week. And three, we will be looking at the current charts, try to understand the current market structure, and potentially identify the key price levels and, of course, potential market opportunities for today as well as for the week. So hello, Caspar. Hello, Luca and Richie. Thank you for joining the session. So for anyone who is new or just joined the session for the first time, you should know that this is something that happens every day, Monday to Friday at 11 a.m. This is where we discuss the market snapshots. So if you're a beginner trader, you should know that we have a full course for you. It's available online on the FXPesa YouTube channel. It's called the Novice to Pro series. So all you have to do is go to the FXPesa page, find the channels section, and look for the Novice to Pro. So now that being said, let's get things started. Hello, Ronald. I don't think it's afternoon yet. It's still morning. So let's get things going. So first thing to notice is that on Sunday, which was basically yesterday, we had the daylight saving time shift happening in Canada as well as the US, and of course the entire Americas. So what daylight saving time basically does, it basically changes the clock past forward by 1 hour or backward by 1 hour. So in this instance, our American and Canadian clocks have been adjusted backwards by 1 hour, which basically means we normally get to see the New York session starting at 4:30. And now we will be expecting the session to be starting at 3:30 p.m. So in this case, the markets will be opening 1 hour earlier. And of course, recently we had the adjustments happening in Europe. So in this case, all the daylight saving time has been moved backward by 1 hour. So this basically means that we were used to getting the London session starting at 11 a.m., but now it's starting at 10 a.m. So going forward for the week, we have quite a number of news. One of the most important ones will be a central bank decision by the Reserve Bank of Australia. And this will be happening tomorrow at 6:30 a.m. And I think this is the core news for the week. Whereas no other central bank will be making an interest rate decision this week. So besides seeing other central banks continuously holding interest rates steady, we saw this happening with the Fed, or the Reserve Bank of the US, last week. So also we saw the ECB 2 weeks ago holding rates level. We saw the Bank of England holding rates level, Bank of Canada, and many others. In this case, we have a slight variation with Australia, where now we're expecting the Reserve Bank of Australia to hike interest rates by 25 basis points from 4.1% to 4.35%. So in this case, this is expected to strengthen the Australian dollar against the other currencies. So besides this, we will be having more news happening in the week, and one of the most important and consistent themes for the week will be a couple of speeches by central bank governors. So the first speech has already happened this morning from the Reserve Bank of Japan. And this was a speech from the new governor, Ueda, and this happened at 4:05 a.m. So going on for the week, we'll be having a couple of speeches from FOMC member Cook, and this will be at 7 p.m. today, MPC member Peel at 8 p.m., and German BUBA President Nagel at 9 p.m. So it might be a consistent theme for the week to observe these speeches. We get three more speeches from FOMC members. These will be happening on Tuesday at 5:15 p.m. from FOMC member Barr, and then Walla at 6 p.m., then Lohan at 9:25 p.m. So fast forward, Wednesday, we get a speech from Bank of England Governor Bailey at 12:30 p.m. Then Fed Chair Powell speaks at 5:15 p.m. FOMC member Barr, FOMC member Jefferson. This is 10 p.m. and 12:45 a.m. as we get into Thursday. Then even more speeches. We have governing board member Schlegel from Switzerland speaking on Thursday at 8:15 p.m. Then ECB President Lagarde at 8:30 p.m. on Thursday. Then at 10 p.m., another speech by Fed Chair Powell. Then RBA monetary policy statement at 3:30 a.m. on Friday. Before we look at a couple of more speeches, one from ECB President Lagarde at 3:30 p.m. on Friday, and of course, FOMC member on at 3:30 p.m. on Friday. So as we approach the end of the week, we get one more speech from German Buba President Nagel at 6:20 p.m. So as you can see, it's speeches right from Monday through Friday. So also important to notice for the week, we have construction PMI from the UK. This will be happening later today at 12:30 p.m. Of course, the IVA Purchasing Managers Index for Canada at 6 p.m. And these are the major news for today. So out of focus will be put on construction PMI in the UK, IVA PMI, but also the final services PMI for the Eurozone at exactly midday. So other important news for the week is inflation expectations for New Zealand. We'll also be getting CPI data from China on Thursday, 4:30 a.m. Then unemployment claims for the US on Thursday, before we look at the GDP from the UK, and this will be on Friday. And of course, we end the week with a preliminary University of Michigan Consumer Sentiment Survey on Friday. So on the earnings side, there's quite a number of earnings that we will be expecting to see for the entire week. So key highlight for Monday is Dish Networks, Devon Energy, Freshpet, and TripAdvisor. Then on Tuesday, we have Celsius Holdings, Datadog, Dutch Bros, Fisker, Occidental Petroleum, Rivian, Toast, and Uber. So I would be very much interested in seeing how Occidental Petroleum has performed in the last quarter. This will be very important for any investor who is looking to bet on oil over the next couple of months, especially considering that Warren Buffett has such a huge position in Occidental Petroleum. So on Wednesday, we have Disney, and this seems to be the key earnings to watch for the entire week. Then we have Affirm, AMC, Marathon Digital Holdings, Trade Desk, Under Armour, Twilio, Warner Bros, Discovery. Then on Thursday, we have Novavax, Oatly, Yeti, The Trade Desk, and Wayne Results. Of course, on Friday, we don't have any notable earnings. So as the earnings season comes to an end, and we get now less and less companies reporting, our focus will now shift to the central banks and the things they are looking to achieve in the next couple of weeks. And following what the central bank governors have been saying, especially over the last 1 week, then there's quite a number of things to make sense of, especially regarding the global equity markets. So the key highlight of last week was that the US equity indices had their best week for an entire year, and of course, also for multiple years. So this was the most bullish time for US equity indices in a long time. So what we saw is the market opening here and then closing all the way up. And this was a gain of 6.4% for the NASDAQ. So if you look at the Dow Jones, also had a very strong gain. So judging from the opening of the week to the end of the week, this one was up about 5.2%. Of course, for the S&P 500, also it was one of the best weeks in a long time. So being up somewhere around 5.82%. So this came following news that the Federal Reserve Bank of the US was going to hold interest rates steady at the current level of 5.50%. So the key question that you have to ask yourself this week is, what changed last week that caused so much bullishness in US equity indices? and so much bearishness in the dollar index. So the dollar index had a big sell-off. So if you look at what happened last week, after opening here, the dollar index basically closed down by about 1.33%. So what changed is that the market was largely expecting Fed Chair Jerome Powell to announce a potential interest rate hike on the next meeting, or at least be hawkish about it. But then he wasn't hawkish. He was basically pretty neutral, not promising anything, but on the other hand, basically saying that there is that potential that the Fed could hike rates if conditions continue to worsen. So despite the market overall expecting that the Fed would hold interest rates steady at the current level, there was about 98% probability. The resulting price action was a big sell-off in the dollar and, of course, a very strong bull market for equities. So we had this structure where the dollar index was trading up and down, but then the structure was broken, basically indicating the bearishness that was there in the market. So the bond markets also showed some falling yields, but then looking at the overall picture, the yields in the US are still significantly high. Interest rates are high, and Fed Chair Powell was very straightforward, saying that they are not going to do any rate cuts. So as a result of that, there's this expectation that the dollar may start recovering this week. So as long as yields remain high, despite the sell-off that happened last week, interest rates remain high and there's no rate cut in sight, then the demand for the dollar may continue rising, and we could be seeing some recovery happening this week. So that recovery could be starting as soon as today or even tomorrow. So that's what we are on the lookout for. So for now, when you have such a huge sell-off in the market, you don't want to trade against it until you have evidence of bullish entry. So we don't have that evidence yet. And of course, it's too early in the week to decide to trade against this trend. So you might have to be patient and wait until there is sufficient signs showing that the market is now changing direction. So as for now, it looks like a continuation of what was happening on Friday. So we might be expecting these pairs to continue gaining against the dollar. So for the pound, USD, we could be seeing some further upside. So for USD yen, we don't have a reversal yet. So we don't have any evidence that buyers are entering this market. So for now, we could be seeing continuation of the prevailing trend that we left on Friday. And it's the same thing across board, even for Euro USD. After bouncing on this area here, notice the channel that was created here that started in September, and now we are seeing the euro gaining against the dollar. So as for today, we could be seeing some further attempt to push prices higher, but the real opportunity is in the opposite direction. So USD CAD, notice the big sell-off followed by the continuation we are seeing today. And some of these markets haven't hit major support or resistance levels, and there's still more room to continue trending. So after certain market structures were broken, you can see, like, for instance, this one, market breaking the structure and continuing to move down lower. There's still more room for downside. Maybe it could go to the next support area here, and all these basically leaves more room for more momentum. So as for gold, we would be expecting gold to make a strong rally against the dollar, especially after a weakening dollar last week. But then what we are seeing is gold remaining inside this structure. And this is quite amazing, especially considering that most other pairs were extremely volatile against the dollar, and they took advantage of the dollar weakness to make strong trends. So with gold remaining within this channel, then it basically means that we could be seeing some potential trading opportunities with gold, and this could as well happen if the gold price gets to the previous support area. So notice that here there seems to exist some form of what looks like two trend lines. So if you ignore the tails, then the trend line takes this shape. So the value area lies in between the two trend lines. So around this area, if we could see gold falling to this area, then it would mean an area of potential market entry. So some further downside in gold would basically imply that we're in a value area, and perhaps we could be looking to squeeze a position here, especially if we see a rejection of lower prices, just like it happened here. So I just want to highlight what we are looking for, something like this. So also, if you happen to see something like this, then this could be the signal to trade gold. Because for now, we don't have a very strong momentum in the markets, so patience is key. So AUD/USD managed to break out of this structure after the strong bullish momentum. So notice how the top of this pattern is pertinent to trading this pair. So the top of the pattern is right here. This is the highest price that we have seen in AUD/USD in a long period of time. So the market kept trading within this structure and eventually broke out towards the upper side. Last week, rallied all the way up, got to this area and then to the top of the structure. So we are at a key decision point for AUD/USD. And of course, this could lead to a potential break or even a reversal. So this is the area where we are looking for a potential market opportunity, looking at whether the market crosses that area or whether it starts reversing from here. So as I mentioned, the opportunity is in the reversals. So we just have to be patient. And of course, for the US Tech 100 or the NASDAQ, we had this rally, but then it hasn't broken out of structure. So all year, we have seen this as the highest price of the year. And since the market got here, went down and then up, down and then up, we have had this consecutive number of times where the NASDAQ has been unable to break. So we had the first instance, second, third, fourth, fifth, and now the market is back to the same level. So in this case, we start getting bearish from this point onwards. So the market hasn't hit the trend line yet. So we are looking at 15,188. So from this point, now we start looking for potential market weakness. And if there's an evidence that bears are entering this market, then that will be the time to short. So for now, we know it was one of the best weeks in history for the NASDAQ, but then potential market opportunity will be continuing to short the NASDAQ because technically last week nothing changed. So we didn't have something substantial that is supporting the current rally in the NASDAQ. What we had is the Fed holding interest rates steady, and with this, we expect the bond markets to continue ruling and dominating. And as a result of that, the stock market could take a step back. So I remember when the market was here, this is when we were announcing that the market is officially in a correction. So a correction is where we mentioned that from the most recent top to the current price level, it had dropped by more than 10%. So we saw 11.79% here, but then immediately the market bounced. But then the bearishness still holds very strong. So for the Dow, also it hasn't broken structure. So this has been the structure right from the highest point in the year. So we had this huge drop and then the market bounces strongly. And now we start looking for potential short selling opportunities. And of course, for the S&P 500, it's also within structure. So there's still more room for upside momentum for the S&P 500. So we need to see this high. This is the highest price that we saw in the month of October. And now, once the market gets here, then perhaps we'll start looking for short selling opportunities. So there's still more upside potential for the S&P 500. But remember, this week is about looking for potential reversals. So as for Brent oil, we are seeing a bottom being tested 4 times. So first time, second time, third time, and fourth time. And this is within a span of 3 trading days. So it seems like a really nice bottom that the oil markets have found. So this week, I could be expecting to see some further upside momentum happening here. So having failed to break this bottom for a while, eventually the market broke towards the lower side, found yet another bottom. So if you notice, there was this bottom and then this area here acted as support. And this is a key theme that we have been looking for in oil markets, trying to understand the major support for this particular commodity. And once we understand it, then perhaps we'll be able to time the rally in a strong way. So right from the opening of the day, there seems to be some nice support happening in Brent oil. And I think the core theme for today will be seeing whether the market retests the high that we saw last week on Wednesday. So potentially a good rally to $86.9 per barrel. So from the 4-hour chart, this is how it looks like, and from the daily chart, this is how it looks like. So clearly, a market that is struggling to make this change. So after the big sell-off that kept happening last year, we found a bottom around $70, $71 per barrel. So after finding this bottom, then the market rallied for 3 straight months before finding a very strong resistance. So the resistance was somewhere around $95 per barrel. So this is the highest price we saw. And then there seems to be an existing bottom happening here. So let me explain. This is the bottom we are seeing in oil prices here. So that was the bottom in August, October, and now we could be seeing oil prices bouncing from this area. So having seen this, then we basically know that from the 4-hour chart, then it seems like a really nice bottom to find a nice bounce. And if this happens from this point onwards, then a good rally to 86.9 might be a potential trading opportunity going for the rest of the day. So European equity indices also had a similar rally, broke major trend lines. So for the French 40 index, there was a good breakout from this particular trend line. So we noticed that this major support area would happen to be our resistance, and then the market rallied as expected, found support resistance at this area. And since then, you can see that on Friday, the market was unable to break there and kept going back downwards. So more evidence of bearish entry will be required. And if we see that, then the idea is to trade back downwards. So for the Euro stocks, it's a similar thing, a very strong rally. We go to the previous lows acting as the resistance now. And now it seems like the market is stuck there. We don't have much fueling the markets today. So we could be seeing the market holding on around this area until we see evidence of a bearish entry or even bullish entry. So we just monitor this consolidation and wait for that signal to know whether the market is breaking higher or lower. So Bitcoin has remained in this consolidation for a while, despite attempting to move higher. So in this case, we continue monitoring the consolidation until there's evidence that Bitcoin is now breaking to one direction. So we don't have a direction yet. So it seems like the consolidations continue. So what we are seeing is Bitcoin continuing to hold onto this support area here. And of course, for the resistance, I would say now we are taking this path here with just 1 point having acted as an outlier, the attempt to go up which failed, and now Bitcoin remains within this long-term consolidation. So we just have to observe and wait for the next break. Of course, for the USD, trading against the Swiss franc continues losing. Remember, we are looking for reversals. So for now, these pre-existing trends on the major currency pairs, they're expected to continue for the day until we have something fueling the momentum otherwise. So New Zealand USD also doing the same, a big rally, consolidates for a while, and now you can see the market is attempting to make a continuation. So for the day, I expect the majors to continue in the same direction until they hit a major resistance or support level. So in this case, for New Zealand USD, an immediate target is around 0.60159, which was basically acting as a resistance for a while. So we could be getting some further upside momentum from this. And I think this is a core theme among the major pairs. So Euro USD expected to continue in that direction. Pound USD expected to continue rallying. In fact, it has already broken last week's high. So this was last week's high. Now we have broken this, so more room for upside. So USDN expected to continue in this direction. We haven't hit support yet. So the support level is around this area here. So as you can see, there's still more opportunity to continue in that direction. But the key idea for the week is to look for reversals. As per now, we just read the continuation of where we left the markets on Friday. So in this case, USDN expected to retest this area here. So USD CAD also doing the same. So big sell-off, we haven't hit a major support level. Continuation is expected. Gold within structure, observing to see evidence of a strong entry by buyers. There seems to be something coming up. So top of the hour will be a key decision point. AUD also doing the same, attempting a continuation. So now I think everyone knows where to look. So that being said, as we approach the end of the presentation today, I'll be checking to see if you guys had any questions. So hi, Ronald. You can see Emmanuel in the house. Hi, Joseph. Hi, Agnes and Nyamari. Hi, Jason. Take out Manabasto. So if this week Powell indicates dovish on dollar, Nasdaq may break the upper trend line. I don't think so. I have a very strong opinion that the Nasdaq may not break that upper trend line, and we could be seeing some sell-off coming up. But then that is for the market to decide. So we only observe, see what we see in the market, and then react to how it plays out. Can you kindly explain how the XY affects oil? Oil is priced in dollars. So when you're trading oil, always remember that you're trading a pair. So on one side is the price of oil in dollars, and of course, the other side is the price of dollars in oil. So when you think of that as a pair, then you know just the same way pound USD moves as a result of things happening in the UK and things happening in the US, then it's the same thing for oil. So it moves as a result of things happening to demand and supply of oil, as well as things happening to the demand and supply of the dollar. So of course, if the DXY is the standard, or basically the benchmark for measuring the strength of the dollar, if the dollar is strengthening, then in that case, you can basically get more oil with the same dollars. So it basically means that if the dollar is strengthening, it will strengthen against all other assets or all other pairs. So in this case, there is that inverse trading relationship. Had Powell say in his speeches that the Feds have continued reducing their security holdings. Does the trade, what securities? I'm trying to read this. Does the Fed trade any securities? Yes, the Fed always does. So in times of economic crisis, it's the unlimited buyer of treasuries. So it basically buys bonds and mortgage-backed securities, and this is what we call quantitative easing. But then once there's too much money in the system and they want to reduce this money from the system, they do the exact opposite. And in this case, they practice what we call quantitative tightening, which basically implies selling all these assets that they were holding or allowing these assets to reach maturity. So for the Fed, there have been a tightening policy, and this is what has been leading to the strength of the dollar because they've been removing liquidity from the markets. So with this continuation of this process, it basically makes the dollar scarce and therefore strengthening the dollar. And when this happens, then it has the overall effect of slowing down the economy. However, from what we saw last week, the US economy is not slowing down. The GDP is currently pretty strong. The job market is also slowing down somewhat, but not at the expected pace. And of course, the housing market is heating up again. So it's multiple signals that are moving in opposite directions. But overall, from the inflation number, the Fed has not achieved its target of 2%. And that is becoming quite a challenge. So as a result of this, there's an expectation that the Fed may go for another rate hike on the next meeting. So in this case, nothing has changed. The talk from Jerome Powell has remained the same. So with further tightening, rates remaining higher for longer, I expect the dollar to continue strengthening and of course, equity indices to resume their bearish momentum. So in this case, be on the lookout for potential reversals, especially after last week's extreme price movement. So I know this can get a lot of people excited. You'll see it in analysis and news. People saying that the Nasdaq, the Dow Jones, the S&P 500 have had the best week in the year. And these will fuel a lot of traders to think that things have changed. But then we both know that the fundamentals have not changed. And eventually we'll be seeing some reversals happening here. So be on the lookout, be prepared. And when that opportunities come, then make sure to take advantage of those opportunities. So thank you guys. And I hope to see you on the next session. Remember, that's tomorrow at exactly 11 a.m. If you have not subscribed to the channel, make sure to subscribe, put notifications on, so that whenever there is a live session, you will be notified. Yes, the Fed buys bonds, especially when it's looking to stimulate the economy. But then if it's looking to tighten the policy, then it basically sells bonds and absorbs the excess liquidity from the system.